Welcome to another episode. My name's Jose Najarro, and today we're going to take a look at Virgin Galactic. So let's get started. So today, Space reported earnings. This is actually the first earnings that they reported since going public. They went public, I think, in either mid-October or early November. So this is the first time that they're reporting to the public. The company is down about 6%, sitting at $31.86 right now. And this company, if you guys have been taking, has just gone on a crazy ride. Just about a month, 2 months ago, when I did my previous video, the company was sitting at around $18, $16, $17 around that price range. And it's crazy how it's just doubled in a matter of a month. So like I said, right, today was their first public earnings report, and it was for Q4. So what we're going to take a look at today is, first, we're going to take a look at the presentation that they provided for us, and second, we're going to take a look at the financial statements that they provided for us. And after that, we'll take a quick look at some of the articles floating around the internet right now, and finally, I'll just end up giving my thoughts on the company. So like I said, right, the first thing we're going to take a look at is the slideshow they presented to their investors. So this was for both the fourth quarter and the full fiscal year of 2019 for the investor update, and it's today, February 25th, 2020. I went ahead and highlighted all the information that I found important. And some of these, if you guys did watch my previous video, it does seem some of these slides are the same ones they've used in the previous investor conference. So some of this information is pretty similar to that what they presented about 2-3 months ago in November and October. All right, so here in the presentation, they start off with some milestones. Some of these milestones, again, are in my previous videos, and some of them were actually removed. I guess they weren't those big major milestones. But here first, December 13th, 2018, the first commercial space vehicle put humans into space. And that was the first thing, right? The first commercial space vehicle. So the purpose of these vehicles are not to do space missions. It's more for just the commercial aspect of it. Then we have in February 22nd, 2019, which again is only a year ago, the first non-pilot crew member flew on a commercial space vehicle, and the first non-pilot crew member was able to unstrap in space and float freely. Then we have in May 10th, 2019, Virgin Galactic started to move into the new facility, Spaceport America, which is in New Mexico. Here in August 15, 2019, they relocated their carrier ship, the VMS Eve, from their California to their New Mexico base, and the Spaceport America became operationally functional. And we'll see in a bit, if you guys are new to space, Virgin Galactic, this company, it's pretty much two ships, two planes that end up doing the missions. The first one is the carrier ship, which is the VMS Eve, and we'll take a look at the other aspect later. I think they mentioned it later. On October 8th, 2019, this is actually pretty recent. This is about 3 months old, and I think this is actually a pretty impressive thing. They announced a strategic partnership with Boeing and announced a $20 million strategic investment by Boeing's Horizon X venture. And we'll take a look at how much Boeing actually owns of this company. It has a small percentage, very small percentage ownership of Virgin Galactic. On October 16, 2019, I thought this was actually pretty funny. Not funny, but it was pretty random. Under Armour announced collaboration with with Virgin Galactic, and they unveiled that they're going to make the spaceware system for future astronauts. Which again, I think it's kind of cool if eventually, in the future, right, we're all traveling to space. Are we gonna all be wearing Under Armour? So that's a long shot for Under Armour. In October 25th, 2019 was when this company went public. Here we take a look at some of the board members for this company. The chairman of the board is Chamath. Name could be completely wrong. He is the founder of Social Capital, and he is a senior executive of Facebook. And then here you also have a lot of other different board of directors, each with either we'll see they have a lot of they have some form of experience with with space, aerospace, or with the company as a whole. So here, right, the one of the board directors is the CEO of Virgin Galactic, George Whitesides. He was the chief of staff of NASA, and he is the vice chairman of the Commercial Spaceflight Federation. Then we have Wanda, right? She's also a board director. She is the president and CEO of the Aerospace Corporations. We have the COO of Twitter. So we can see we have a lot of people that have to deal with airlines. Craig Krieger, he has various roles in American Airlines. Here we have George Mattson. He does Delta Airlines, Air France. So we can see, right, there are a lot of people here with either some form of space experience, or if not, some form of airline experience. And the thing is, right, I think it's pretty important to have people in that airline experience, because they want to build some form of experience for the customers, right? Because at the end of the day, this is pretty much just an airline for space. And then they also have other growth that they want to, we'll see their point-to-point travel, which I think is a very important thing for this company as well. In November 15, 2019, they kicked off their astronaut readiness program. Just a month ago, on January 8th, 2020, the second spaceship achieved weight on wheels milestone. So that pretty much just means that they've created pretty much the heavy part of the spaceship, and now it's sitting on the wheels. So that's why it's weight on wheels. And the third spaceship achieved 50% completion of structures and system fabrication. February 3rd, 2020, about 2 weeks ago, they relocated the first spaceship, the VSS Unity, from their California to their spaceport in New Mexico. And here we can see, right, this was the carrier ship right here. I forget what the name was. Let's scroll up real quick just so I can remember the name. Still scrolling. The VMS Eve. So we can see here in this picture, the VMS Eve is flying, and like we said, right, the VMS Eve is the carrier ship, right? This one right here, this is still the VMS Eve, and then here the actual ship is the VSS Unity, which is this ship right here. They also are going through their FAA approval process. So to be able to do all this type of commercial work, they have to do a lot of approval process, and that's one of the reasons this company says that it's very hard for other companies to come and try to take over customers for them, because it is a very hard space to get into. Okay, never mind, don't worry about that. So they have to go with about 29 approvals, and right now Virgin Galactic has cleared about 20 of those 29s. 10 have been completed so far in Q1 of 2020. Next, they're also working on their test program update. They're finishing the test flight program, and they're optimizing the end-to-end customer experience. So again, right, not only it's pretty impressive how this company is, one, developing the ships and developing the programs for it, and at the same time they're also developing the end-to-end customer experience. And if you guys have seen my previous video, right, this company, Virgin Galactic, kind of split up into two different companies, which I think was pretty smart for them to do. One of those parts is what is still called Virgin Galactic. They're still both under Virgin Galactic umbrella. One of them shares the same name as the umbrella, so Virgin Galactic, and that's where all the engineering happens. And then the second, I can't honestly remember the name, but that one is the one that deals with the customer experience, collecting the sales. So one is the engineering team, and one is pretty much the sales team. And I think that was a smart move for them. Each of them have their own independent boss as well. But I think that was such a smart move, because it is a very heavy engineering dependent project here. But at the same time, you also need to make sure you're providing your customers with the great amount of experience. And sometimes engineers are not the best people to know what the customer truly wants. All right, so now we're going to take a look at their growth strategy. I think this company has a 4 to 5 growth strategy system. The first one is scaling the business. So the way they're going to do this is by the end of 2023, they want to have 5 ships ready to go. Right now, like I said, right now they only have one actual working system. and the actual working system, right, is the Eve, the carrier unit, and the Unity, which is the actual spaceship. And by the end of 2023, they want to have a total of 5 ships at their spaceport. Growth strategy number 2 is they want to increase their total addressable market. So right now they're starting with so they want to do this by lowering the price significantly, and which will expand the total addressable market for them. And just for right now, they're charging an entry price of $250,000 per ticket. They believe right now maybe only the people around the net worth of $10 million plus would want to enter, would want to do something like this, and that would give about 2 million people right now have a net worth of about 10 million plus, which is their total addressable market. If they start to lower the price, for example, net worth of 5 to 10 million, $10 million, they have a little over 3 million customers potential. And if they then decrease the prices lower, where they're able to provide to the net worth of 1 to 5 million, $5 million, you're seeing an addressable market of over 37 million people. So right, they want to do this by increasing their sales, increasing their manufacturing efficiencies, their labor efficiencies, and advance in technology. They are also in discussion with other governments, Italy and UAE, for potential new spaceports, which again I think is pretty impressive that they're already thinking about going into different spaceports to reach different customer base. Their next growth strategy, number 3, I think is one of my favorites, and this is high-speed global mobility. And the reason I think this is going to be such a big thing is one of the most important things for people is time. If they can save time doing something, they will definitely pay extra. I mean, you can see if you go to like a Disney park, or if you go, I don't know, right now my mind is in an amusement park. So if you go to an amusement park, people pay to have those fast tickets where they don't have to wait line, and they would pay easily double the ticket price to just be able to skip lines. And this is something that Virgin Galactic is trying to do. They're trying to create high-speed mobility, so it'll be hypersonic point-to-point travel. So for example, New York to London, which is about a 6 to 7 hour flight, they expect it to be able to be made in under 1 hour. From Los Angeles to Tokyo, which is about a 12-hour flight, they expect it to make it about 2-hour flight. So this is Los Angeles to Tokyo, current business jet is about 11 hours, and they're expecting somewhere around 2 hours with hypersonic travel. And again, the opportunity there is very high. There's a lot of high net worth people that again would prefer. For them, time is very important, so they would gladly pay that. And I think that's one of the places where they're going to be able to reach a huge amount of potential customers. So that, right, for fourth quarter 2019 business highlights, like I mentioned, right, this company is not really making money right now, so they're not going to give you highlights of what this company did financially. They're going to talk about what actually happened with the company, and some of these are things I mentioned already. First, the first one I thought was pretty cool is they achieved critical design and build milestones on the second Spaceship 2 vehicle. They continue to clear FAA verifications and validations. They entered into a new contract with the Italian Air Force, and they added 3 new board members with extensive experience and space and aviation experience in space and aviation. So now this company's cash from IPO was about $552 million. We're going to take a quick look at this company's income statement and balance sheet to see how much cash is left. But right now, public shares own about 27% of this company. In public, the IPO sponsors own 13%, and Boeing owns a 1% equity on this company, which I think is actually pretty impressive. Rollover equity is about 59%. So this rollover equity is equity that eventually in the future, if this company wants to, it could use for dilution and to build up more cash in the future. So now for the fourth quarter, this company ended with cash and cash equivalents of $480 million. Right, this company considered got a total cash of $552 million. So it did bring about some cash. Revenue, like I said, this company makes almost no revenue. It barely made $500,000 in revenue by providing engineering service. This company had a net loss of $73 million for this quarter. And if you adjust that earnings before interest, taxes, and depreciation, amortization, that $73 million loss goes into $55 million loss. If we take a look at the full year, this company burned about $211 million. But if we adjust that before fake cash expenses, this company only lost $187 million. So this company did mention, I think I saw it here, this mentioned that this company is expected to be profitable by 2021. So right now we're sitting in 2020. So that's I want to say we got to go through the full year of 2020 and the full year of 2021. So that's 2 years. So if this company is burning about let's say the top end, $211 million of cash a year. So that would mean that in 2 years it would burn 422. This company right now has plenty of cash and cash equivalents to survive for 2 years. But again, that's a bad thing. If this company doesn't go positive by 2021, then this company is either going to have to dilute for more cash. And we see this company has plenty of equity rolled over that will be able to get more cash. But that's definitely not something an investor wants to see. Another thing, current reservations. They received about 8,000 registrations of interest for flight reservations as of February 23rd, 2020, which is up almost over 100% compared to the 3,500 that they saw just about 4 months ago in September 30th, 2019. So they are seeing that increase in interest in reservations. But again, these are just form applications. This company does mention that why they use adjusted earnings before income taxes, depreciation, EBITDA. So right, that's earnings before interest, taxes, depreciation, and amortization. So these are pretty much taking off expenses that this company either doesn't pay. It's pretty much just, it's a way for them saying this is what they're really doing. There's a lot of back and forth. This is just another way to show better than actual results. And I think every investor has their own different mindset of this. But one reason they use this is because they exclude stock-based compensation and non-reoccurring transaction costs. So quarter 4 19 expenses were a little higher than what was expected, but they're saying it was mainly due to public company efforts, mainly around auditing, legal, investors relations, and insurance. These are expenses that before being a public company they did not have to worry about this. Also, with the new space station that they have in New Mexico, they had to do relocations for employment, vehicles, equipment, and other type of work like cabin and interior work. So right, the first thing, one of the things I mentioned, right, they have about 8,000 prospects right now that have signed up for some form of future information on this. And then the next part of this is to create a smaller pool out of those 8,000 people, to create a pool of qualified prospects that are willing to become the next people to travel to space. So now in February, so right after they create this more qualified prospects, the next thing is the one giant leap, and this would be the future astronauts. So right, once you have to go to space, you still have to do some form of training to do that. So that's the next step. And right now we're in one small step, so we're still qualifying prospects. So February 21st, 2020, which is today, they launched their One Small Step initiative, which is online registration, and you can get a $1,000 deposit to go in front of the line for future ticket reservations, right? And this is $1,000 refundable deposit. For the customers, right, you end up getting front of the line position to purchase seats, and you get an enhanced relationship with Virgin Galactic. For Virgin Galactic, there's also a great thing happening here, right? The first thing is that tunnel sales, now they know what customers are truly interested in going this, because if they're willing to go to the time of paying this to make sure that they have future ticket reservation, then you know these people are truly willing to pay for the trip later on. It establishes a relationship with future customers, and it provides a pool of qualified prospects for conversion. All right, so I was talking about the ships, right? The first one we mentioned was the VMS Eve, which is the carrier craft. So this one pretty much just takes the Unity to the launch altitude, which is approximately 45,000 feet, and then from there, like, drops off, and the Unity does its own work. This crew is only 2 pilots. I'm actually not sure if they both fly. That's pretty impressive. I'm pretty sure it's just one bridge, but they have to have both symmetrical here. But it's only a 2 pilot crew. The next thing they have is the Unity, which is the spaceship. So for the spaceship, they have a total of 6 passengers, 2 of those being the crew. And this is the ship that ends up flying after being dropped off from the Eve. The final thing from this presentation that we're going to take is Virgin Galactic has a commitment for safety, which I think is pretty impressive. Is pretty important, not impressive, important, because I do think if one big accident happens here in space, it can be a really big turning point for the company and a very scary moment for investors, and unfortunately for whoever is involved in the accident. So hopefully no accident takes place for everybody in here, right? But first is they have a takeoff and landing on regular runways similar to typical airlines. So this, again, having a similar type of runway will make sure that their pilots are always used to where they want to take off and land. They don't have no surprises there. They are using a very reliable ship, highly reliable and rigorously tested jet engines for the first 45,000 feet of journey. They do have each ship has 2 pilots, which is pretty important because it creates redundancy in operations and in space safety. Seating, they do have seatings. They have 2 position seating to favorably redirect the G loads in accordance with the phases of the flight. So depending on what type of flight of where you are inside the Unity, if in the Unity you're still in the Eve, just going to the right altitude, you might just go into the regular seating that you find in airplane. But the moment the Unity changes to go jump into space, you might change into this type of position where it allows the seat to redirect the G loads. The final thing is the final one I want to talk about is this company has a board architecture. So at any point, any phase throughout the system, they can shut down, they can end the phase, and this mission will abort. So yeah, now let's take a look at this company's financial numbers. So most of the information they have here are the same. It's the same information that comes from their investors web, from the slideshow we just took a look at. So right now, right, revenue, I don't really want to take a look at revenue because, right, revenue is pretty much non-existent for this company. I just want to see how this company is doing with expenses and if there's any big difference compared to how they were just a year ago. Research and development seems to go up by about $15 million. Not a big increase in my opinion. So, and I understand that this company needs to continue to develop and spend in researching. So that's okay to see that form of increase. It's not a big increase, and I know it's being used for the good reasons. Next, we have selling, general, and administrative expenses. These are pretty much employees. And here, this actually increased by $30 million. That to me is actually a big jump. And I would like to see their 10Q report when they post it to see why this company has increased its selling its expenses in this part dramatically. So we can see operating losses were pretty large, $213 million this year compared to $167 million last year. All right, so next I just want to take a look at some articles. The first article comes from CNBC, and the first thing is one of the main reasons this company seems to be down is they did show a loss that's more than expected. they were expecting about analysts were expecting about a $47 million loss. This company lost about $55 million. So that's a big increase, especially when this company has barely, where this company needs to make sure to conserve its cash. So it's something that brought the company down. Another thing is Whiteside said that this company, they are expecting to go back into taking more reservations, and they do a plan on going with a higher ticket price. So originally the ticket price are $250,000, but they are saying that, hey, we're gonna come back with a higher price. The company right now has a total of 603 reservations on books, for most tickets ranging somewhere between the price of $200,000 to $250,000. The next article I wanted to talk about comes from Wall Street Journal. And here again, the first thing we talk about is Virgin Galactic ended the year with $480 million in cash. Some analysts have questioned whether it should use its soaring stock price as leverage to raise more funds for future phase beyond tourism. Right. So one thing this company do is can go in a dilution, can dilute some of its equity, similar to what Tesla has done. I'm not a Tesla. I don't do much research in Tesla, but I know that recently when this company hit its all-time highs, they started diluting some more shares at that price to allow them to build a strong cash balance sheet. And seeing that, a lot of analysts are saying that, hey, maybe Virgin Galactic can do similar things to build a stronger balance sheet. But during the earnings call, Mr. Weiss said that there are no plans to raise more funds beyond the potential exercise of some share warrants. So right now, that's pretty much saying, hey, we're not really looking into selling more equity of our company. So right now, it seems like investors don't have to worry about dilution. But we'll see if the price keeps going up. I think the possibility of dilution will increase, just so this company can continue to build a bigger balance sheet. So I hope you guys enjoyed the episode. My thoughts on this company is, one, this company has no form of revenue. So taking a look at historical data is not something you must do. Here is pretty much a company that you want to invest based on the company's product. And I do think this company's product is a very important. It's a very good product. They are going to start seeing customers. It is in a business that it's very hard for other companies to enter into, which is again a very great. It's a great thing to see. They have a very strong team of directors. We see a lot of people from different types of airlines or space experience, which will help this company grow. They do have a very strong plan going forward, right? They have that 4 strategic plan, which we went over. Overall, this company can survive about 2 or 3 years with its current cash and making no revenue and burning the amount of cash that it burned this year. Unfortunately, right, there are negatives with this company. There are a lot of risks. The first risk is, what if a competitor like Blue Origin does enter the market a lot faster? Even though space right now has a lot of more FAA approval process going on than any other company. Other big companies like Blue Origin can't come in and start applying for those. So that's definitely something to take a mind of. Like I mentioned, if an accident does occur, that would definitely be very bad for everybody, investors alike. This is more of, do you believe in the product? Do you believe in where the company is going to go? If so, maybe it's time. The price has increased, but for me, if I didn't have a position like I do right now, I would always, like I've always said, sometimes it's with companies like this. Sometimes, with your gut feeling, if this company goes up more, if it increases like crazy, tomorrow, would you? How bad will you feel because you didn't invest? If you do invest and this company drops down by a little bit, is it really the end of the world, or is it not? So that's how sometimes I go about buying companies like this that don't have some form of true PE ratio or P to S ratio. Even though this company does say by 2021 they are expected to be profitable, and that's almost in no time. So I hope you guys enjoyed the episode. Have a good night. See you next time, and take care.